Hello and welcome to the Rapaport Market Comment. Soon we will have more news to share with you, so please subscribe to this channel if you haven't done until now. Last month, Boston Consulting Group published a 30-page report called The Future of the Natural Diamond Industry, commissioned by De Beers. The report explains the structure of the industry, analyzes recent trends and makes some projections. Its main finding was that rough diamond prices were likely to grow between 3% and 5% from 2023 to 2033. De Beers highlighted this at its breakfast event at JCK Las Vegas on May the 31st. The challenge with this kind of prediction is it involves assumptions, but the biggest influences on the industry tend to be major unexpected events such as the pandemic or the Ukraine war. The diamond industry is inherently unpredictable. Considering that, over the next 3 weeks, I want to focus on two important points the report has made about what has happened in the industry, and one about how Boston Consulting Group has factored in the unknown when making its forecasts. This week, we'll look at the report's comparison between consumer markets in the US, China, and India. We have talked before about which diamonds are popular among consumers in different parts of the world. You can click here on a link to watch that other video. The report noted that demand for luxury goods, including diamonds, usually correlates with real gross domestic product, or GDP, and with personal disposable income. However, this correlation has not been equal in those three markets. In the US, diamond demand has been somewhat stronger than you would expect given levels of disposable income. This is because of a post-COVID bump in weddings and a greater emphasis on emotional gifting and self-reward, the report says. However, in China, natural diamond demand has slowed relative to growth in personal income over the past few years. And in India, the desire for diamond jewelry has grown. Let's look at some of the numbers. In China, 22% of survey respondents in 2022 said gold jewelry was their most desired gift if money were no object, compared with 16% in 2020. But the proportion who chose natural diamond jewelry rose much more modestly to 8% from 6% in the same period based on De Beers surveys. In India, the trend is the other way. In 2022, some 13% of respondents said natural diamond jewelry was their top choice, compared with 7% in 2018. During the same period, gold jewelry slumped by that measure to 7% from 16%. Another relevant data point the report highlights: gold ownership in China increased by approximately 30 percentage points between 2018 and 2022, while diamond ownership remained flat. Just this week, TSL, a Hong Kong-based jeweler with a significant China business, estimated losses of up to $48.7 million for the past fiscal year following weak demand for natural diamond jewelry on the mainland. So why has China gone for gold and India for diamonds? Boston Consulting Group gave several possible and interrelated reasons for China's increased focus on gold. Household saving intentions are at a record high amid economic uncertainty. This favors gold, which has a reputation as a secure investment. The price of gold has also risen sharply, strengthening this perception. Furthermore, younger Chinese consumers view gold jewelry as symbols of Chinese tradition and heritage, alongside that enduring investment value. However, younger Indian consumers acknowledge gold's long-term value but don't see it as the most desirable choice, according to the report, which cited the World Gold Council. In particular, the report said young urban women in India felt less emotionally connected to gold than older generations. At the same time, young Western-influenced consumers in India are showing more interest in modern jewelry designs, pushing them towards diamonds. Also, retailers are currently incentivized to promote diamond jewelry because they offer bigger margins. The group made another important observation about the India jewelry market. It's dominated by local brands and unbranded jewelry. This means that category marketing of diamonds has a larger share of voice than in other markets. In other words, category marketing in India has fewer competitors than in the US, where lots of big diamond brands are also spending money on marketing. This gives a greater opportunity for marketing diamonds as a category in India, over and above the growing interest in diamonds. It probably also explains why De Beers has decided to focus its Forevermark consumer brand on India, where few competing local brands exist. In conclusion, the picture the report paints of the global diamond retail market is quite positive. The US is doing okay. And India is growing as a source of diamond demand. The big problem is China, and that doesn't look like changing soon. This video is sponsored by Rapnet, the world's largest and most trusted diamond trading network. If you buy or sell diamonds, Rapnet is the right solution for you. Find out more at rapnet.com. Let us know in the comments of this video if you have any other conclusions about the Boston Consulting Group's analysis. Next week we're going to talk about their views on the market for recycled diamonds and jewelry. See you then.